Hello, my wonderful people. We are back again today, and this is mostly a continuation of what I did yesterday on using TDI and a moving average to place a trade. But this time round, I'm going to do on a higher time frame, and it works on both directions for buys and sells. So specifically, this is for boom and crash, and you can still apply this on other indices, especially uh, volatility 100, volatility 75, volatility 25, and even 50. But make sure you are not on a lower time frame of less than 15 minutes, okay? So use a higher time frame for this to work. And so what I was giving you yesterday was for 1 minute. Now today this is for 15 minutes and above. So I'll be sticking to boom and crash, crash, boom and crash, 15 minutes time frame. Okay. So before we continue, I forgot the video ended yesterday without me giving the settings of the other strategy. So for today, let me just give you the settings beforehand. So on our main chart, we are going only to use two indicators, and that is a Bollinger Band and a moving average 200. Okay, so let's get it. So it is this moving average 200. Please take a screenshot of that. It is just 200 exponential, whichever color, levels, you don't mind about it because it is on the main chart. And then the Bollinger Bands, I've used a period 20 deviation 1.6. Let's change this to 2.0 because it is on the main chart. I always use 1.6 when it is on the indicator window like the TDI. So for the main chart, you can use 0.20. Done. So that is our Bollinger Band for the main. For the window chart, we are using a MACD and a moving average. So let's check that. So this is the settings of the MACD. It is fast EMA1, slow EMA48, MACD SMA1, apply to close, and you can put whatever colors you choose, okay? And then we come to moving average for the EMA. Remember, you are putting those indicators in an RSI window, okay? So this is our RSI window. Period, you can always leave period to 1. It doesn't matter really the settings. All we need is the RSI window with the levels of 90, 50, 25, 75, and 10. But mostly we are using level 90 and 10. So the RSI window specifically, we need it for the levels. And then we come to the moving average. These are the settings of the moving average. Moving average 5, exponential, close. 5, exponential, close. Okay. So typically those are the settings that we are going to use. Now, the role of the moving average 200 on the main chart is always to give us like the general direction of the trend, because this strategy will not work when the trend is very strong. Like for this instance here, sorry for that. This instance here, how and when do we get a signal? We get a signal when the MACD and moving average 5 to pick an arrow, this here, when the MACD and moving average 5 touch the level 10, yeah, and after touching the level 10 on the main window, the chart must have come out of the Bollinger Band. Okay, so when the chart is outside of the Bollinger Band, then you know it will be reversing as long as it's gotten to level to level 90. Okay, and please note that at that time, exact time when it is touching level 10 or level 90, your moving average 200, which is this golden line, should be in your view, like it is not very far from wherever you are. So that basically is to mean that our trend was not very strong. So like it is a same ranging market, yeah, not very strong in the sense of it had shown a downtrend in a very strong way. Okay, so it is a semi-trending market, not a very strong market like it's going downwards. Like for this instance, you see the market had exactly reversed at around moving average 2. Remember, this is a M15, so the market had somehow reversed at moving average 200 and it started coming downwards. So before it really went very far, then the signal here reached level 10. So that is a very good point for you to put a reversal, because you know after that it will be heading back. It can be like a small reversal if the trend will be strong, but yes, there will be a reversal. So this is how you got this. Okay, in because this is boom and crash, I tend to believe it was two spikes, but these two spikes were very long spikes, because if we can see the 15-minute arrows, how many? 1, 2, 3, 4, 5, 6, 7. It covered almost 6 up to here, almost 6 15-minute candles. So 15 times 6, that is a whole like 1.5 hours, a whole 120 candles of 1 minute each, almost there, between 90 to 120. Okay, so you see, as much as it is two spikes only, sorry, as much as it is two spikes, but it is two massive spikes. Okay, two massive spikes. Also note this, if this moving average is on top of us and our reversal is where the moving average was, then it means that the market could be heading in the general direction, which is a downtrend. So you wouldn't want to hold that trade for long. So you would only wait for it to reach the middle Bollinger Band, and then you are out of the market. Okay, I will show you the areas where you can wait up to it reaches the middle of the top of the Bollinger Band. Okay, so let's continue. And you see, even immediately after that, as much as it went back, it started like going, sorry, I want us to highlight this. The second time again it came, it touched the Bollinger Band, and now it started an uptrend on a very big way. Now, how you can catch the second signal where that is happening is if there is a divergence in your MACD. This peak is not aligning with this peak, yet on the main chart you find it has touched on the lower of the Bollinger Band. Like if you were to place a line, you see, if you were to place a line, the first point where we took our first signal is the same line where it is currently reached again, and also the Bollinger Band here is acting as a resistance at this area. The Bollinger Band is acting as a resistance, and your moving average 5 at this time also is also touching level 10. So the MACD is giving you a divergence, but moving average 5 is touching level 10, and on top of the main chart, our candles are touching the lower Bollinger Band, which is acting as a support and resistance, and it is at exactly the other level where it had spiked last time. So that is another indicator to show you that we will be heading on a downtrend. Okay, like if you would put it on a price action language, you would say it was coming to retest that level again. And also at this time, understand that I need this arrow. Our moving average 200 is within our view, like it is still within our window. It's not been closed out, so the trend was not like very strong that is showing us that will continue. So the moment you started getting this fast spike as a resistance from the Bollinger Band, you would have known at that time that we will spike and go up. And can you imagine how many, as long as this moving average is still touching level 10, okay, sorry, we've started again our drama, but I think you understand what I was talking about. Okay, like in this situation again, is it the same? No, it's not the same, but an exact same situation again is happening in this here, because you find the first time both of them are touching level 10. Okay, both of them are touching level 10, and on our window main chart we see moving average within our range, like that is where the market has been ranging. So here the market will reverse a bit, but it will still be like within the same area, like it has to retest the same position. Okay, it touched again the second time, it spiked, but we are still the same area, and then the MACD left the same area and went up, but the moving average is still remaining in the same area. So it came again and retested the third time. So the moving average is still within the same area, but the MACD has given us a divergence. Okay, so you know by the time the candles here are retesting here, so the first here you are supposed to have gotten a signal and traded up, closed, you know, around the top Bollinger Band, came back again with it. You waited for it to retest. It didn't reach the second time down, but the third time, this here, it came to retest the same level. So by the time it was retesting this level, you are supposed to have seen that the moving average is touching level 10, but the MACD is giving us a divergence. So with this, you can comfortably place a trade that will be like give you long term. Okay, because you see from there it started, as long as it retests the level twice, like the moving average didn't leave level 10 for long, it came and retested within the same signal, you can always place a long term trend. Okay, you can place a trade that it can even last for a whole day, as long as it came to retest the same level. So always be keen when MA5 is touching level 10, because that is a good indicator to you that the trade that will be coming after the second time retesting will be a long term. So in this, you are supposed to have gotten two signals, and the first signal was this. You took this trade and went all the way up to here. You closed that trade because it was almost. Now, in a normal situation, where do you exit? You exit when you are near or you've touched the outer Bollinger Band. Oh, okay, the top Bollinger Band. So you are supposed to have exited within this area. So you took this trade from here and exited it here. It came like it's almost retesting, but it was not giving a clear signal. It went up to on top of the Bollinger Band, acted as a resistance, then came all the way down to the lower Bollinger Band. And now on our indicator window, it was retesting this level 10. The moving average 5 was retesting level 10. So as long as it is touching for the second time, forming something like a W, okay, for the price action, those who know price action, forming something like a W, then you are so sure that at that time you are getting a long-term trend. And can you see how far it went? Actually, you will exit when the moving average 10 touches level 90 on top. Okay, and if it touches level 90 on top, when they are both the MACD and the moving average, it could be also a sign for you to wait for a downtrend so that you come again down with it, because this strategy you use it for both down and up, but you will only place a downtrend trade only if you've gotten a symbol, a clear symbol, like the moving average 200 is not very far from our view. Like for this case here, the moving average was really still within our view, but the more we went, the more it was going higher and higher. So it was supposed to have told you, you know, it is on a strong trend. But look again where we reversed on top. The moment MACD remained at level 90 without shifting, okay, it remained at level 90 without shifting, and it crossed the moving average, crossed and touched level 90. That was supposed to have given you an indication that now we are ready for a downtrend. Anytime you get the MACD touching level 90 and not shifting, like, you know, being stable on that position, it tells you the market is ready to reverse. Okay, and can we see when it reversed? It came up to the lower of the Bollinger Band that I was telling you it's your exact place of where to exit your trade. Okay, and also when you check on the here this level, you see our MACD came all the way to level 10. So you are supposed to have entered at this point. You're supposed to have entered at this point when the yellow moving average was ready to reverse after it had touched level 90, and the MACD was still stable at that time and came all the way with it. And you know, at the lower Bollinger Band is where you're supposed to have exited your trade. Okay. So this is a 15-minute. Also, please note, don't just be very flexible with this strategy, because you see in this situation, when our MACDs and moving averages are within this area, it's always showing you that we are on a ranging market. Okay, we are on a ranging market, and as at that time the market will only be using mostly the Bollinger Band. And you see here, it came to the lower of the Bollinger Band, up of the Bollinger Band, then down again. Now in this point here, when it came, the lower Bollinger Band didn't act so much as a resistance, because at that time the market was so much aiming to touch, you know, the moving average 200 to act as resistance, and at the same time it wanted to touch level 10. The MACD wanted to touch level 10, so it had to accomplish its mission of completing the cycle of drawing an M here and then coming all the way to touch the lower band, to touch level 10, I mean. So when we are on this level here, you can always be a bit keen to pick these few pips here. Like immediately after this resistance, you are supposed to have seen that it will either go up to the top of the Bollinger Band or come down. So a Bollinger Band in this sense, especially on these indices, a Bollinger Band acts so much as support and resistance. Okay, so as much as this strategy is to give you the buy points and the sell points, also be flexible to pick these areas, especially when the moving average is between the 75 is between the 75 and 50 area. So that shows that is always a ranging area. Okay, so we go forward. So look this here, it came, it touched, then retested, but the trend was strong, like the market wanted to go down at that time. So how will you know a valid signals when you're supposed to place for a reversal when it's ready to go back? Only, you see, it's still touching, both of them are touching, but we are not ready to place a trade. Only place a trade when the moving average yellow has crossed with the red one, and our moving average 200 on the main chart is within our view too. And then something else you have to be keen about is that allow the moving average 5 to leave the level 90, like it's formed a curve, it's ready to reverse, like it is given you a cap sort of that is ready to reverse. Okay, now in this incident it had started making that curve, of which if you had really even placed your trade on the first one, on this first spike, and because you missed the first spike, it gave the first spike came it somehow curved, and then you placed your trade, you would have gotten the second spike, which was this other spike. Okay, so immediately you saw that. Let me come here, very key. So there you placed after the first spike, so you got the second spike. But if the moment the market continued going, you see our moving average again didn't move up because it's like it was a weak reversal. So you're supposed to have exited. So that trade for you was not like a losing trade, neither was it so much of a winning trade. So you would have locked your profit. Like, don't allow a trade that has gone into profit to go red. Okay, so you place a trade, it spikes, takes you into profit. Make sure you lock like $2 or $3 as you wait for the market to go up. Lock something, so if it comes and hits your stop loss, take it. Okay, what am I talking about here? So you missed this first spike, you are waiting for an indicator that the market will go up, but you got the second spike. So with the second spike, you place the trade down there, and it went all the way to the end of the spike and then started coming down. So you are supposed to have put your stop loss around halfway. Okay, you lock in some profit around halfway, so that if you are taken out of the market, you have locked like some few dollars, but again, you will be safe from any false signal. Okay, so it will not put you in any negative trade, especially if the trend was still going down, because you see here it continued. We went like two candles, you see the yellow line was almost like returning back to 10 again. So at this time it would have given you like a serious indicator that like we are not ready to go up. So we continued, and immediately it touched level 10. There was another spike, of course, and then we continue immediately after the second spike. Check, after the second spike, then the moving average shifted from level 10. Did you see that? Check again, it shifted. So the moment a shift, anytime you are placing a trade using this kind of setups, and then your indicator, whatever you are using for an indicator, shifts in the level, it tells you that this room that we've created down here is ready for the market to still cover that area. So it is a way to strongly tell you that the trend is still going down, we are not ready to go up. Okay, so be very keen, like even the strategy that I gave yesterday, when the MACD shifts or the moving average shifts, be very careful with that. If you had entered into a sell trade or a buy trade, make sure you close and then let the trend go up to its peak, and then when it is reversing, as long as there is no shift, hold on to the trade. But if there is a shift of your main primary signal that you're using, and in this case it is the MACD and the moving average 5, as long as this shift from the main peak point, which is peak point 10 or peak point 90, always close that trade. Okay, so and you see we left the market, and immediately you see it shifted and then came all the way again. It was now touching, but you know, until it at least the first spike comes, that is when we can be keen to place a trade. So it's still retesting the same level, no clear indication so far. Now from here, it was now like showing a reversal, and it was not like main sort of reversal, because at this time the trend is so strong. And why I would not have placed this trade is because um another key point that I want to give you, if you want to catch a lot of pips, don't place a trade when these Bollinger Bands are very close to each other. Why? I've told you the Bollinger Bands acts as support and resistances. So if the market starts spiking down here, just know that the maximum it can go is to the top of the Bollinger Band. So I wouldn't take such trades as very key to me. I always place a trade when the Bollinger Band is very wide, so it gives me room to play around. Okay, I want to look for such a setup. You see, like this setup here, the Bollinger Band is wide. The Bollinger Band is wide. So if you can be able to get a trade like down here, when it touches here, you see it goes a few pips up. Okay, the Bollinger Band itself is very wide. So I always look for such setups when the Bollinger Band is wide and we are in sort of a ranging market. Okay, and in such a situation when we are in a ranging market, your levels, your peak levels of the MACD, level 90 and level 10, will not shift when we are on a ranging market. Okay, check here, check this here. We touched the level, the top Bollinger Band, then we came all the way down with it, came up to down here, of which the MACD was not touching, but the moving average was touching, and then we went up with it. Well, in such a situation, I would place this, that the MACD was touching level 90. I would comfortably place that because it is two indicators that is giving you the signal. Why? We are at the top of the Bollinger Band, and the Bollinger Band is always a resistance. So I would have taken this signal very comfortably, as much as the moving average was not at that time exactly on top, but I would have placed this trade. Okay, and got this 15 candles times 3, that is 45 minutes. I would have gotten this 45 minutes comfortably. The second one was this. I would have, sorry for that, I would also place that because it is touching level 90 and still at the same time it is on top outside of the Bollinger Band. So as it is coming in, I would have gotten like those 3 candles also of like 15 minutes each. And then this other one I wouldn't have taken because it was not touching anywhere on the Bollinger, on the MACD indicator. Yet on the main chart, yes, but remember I told you earlier, you can always play around when the moving averages is within the ranging area. You can always use the Bollinger Band as support and resistances, because it will always be going to the top of the Bollinger Band, comes back to the lower Bollinger Band, goes to the top again, comes down. So as long as we are on a ranging market within this MACD window, you can always use the Bollinger Band as support and resistance, because that is the most important thing with the whatever, with getting some few pips in the market. A ranging market is always the best if you know how to do it. Okay, like just getting the general direction, placing a trade, and allow yourself to run. With that, you get your few pips and you're out of the market. That is always my rule. Okay, now see here, these levels that shift is what I'm never comfortable with. Okay, check down here, it was a valid trade, a few pips here. Okay, after the few pips, it came again like this. Second time it was retesting the lower Bollinger Band, and this time around there were other pips in place. But again, as I told you, I never love to place a trade when the Bollinger Band is very small. Yes, you will get a few pips, and it will never go past this area, so it will just spike out of the Bollinger Band a bit, and then it will come back into the Bollinger Band. So yeah, there was room for this, but you will always know that it will be within the range. It will not go far out of the Bollinger Band. Okay, we come back. There was no clear look here. So the MACD is touching, but the moving average is not touching. And on top and again here we are seeing our moving average 200 here. We've gone out of the Bollinger Band, and our MACD at the bottom has touched. As much as the yellow moving average has not come, but again, it was a strong indicator that we are generally on a downtrend. Why? The moving average 200 was on top of us, so we were officially on a downtrend earlier. So this here, it's a trade that I could have placed, though 50-50. And where would my closing point be? The lower. I would have probably closed this trade around maybe when this first spike came. Before it came, I would have closed around that point. Yeah. And then you came again with it. Down here, it touched both. But remember, I told you this is more of a ranging market. So these are very good places to catch your trade. Okay. So this would have been another very nice setup. Very nice setup. Going up, then coming down again. Okay. So basically that is for our for this. I think this will be the last tutorial maybe that I'm doing for the MACD. So key point to take home here is let your signal be out of the Bollinger Band at that time. The second point is let your moving average 200 be within your view to show you that we are on a ranging market. And then the third point is let the MACD and the moving average touch either level 10 or level 90, because it is both for buy and for sell. Okay, it works both directions. The fourth point is I'm using zoom level 3 for this trade setup. Another one is so zoom level 3 outside of the Bollinger Band, touch level 90 or level 10, your moving average 200 to be within view. Like basically let it be a ranging market. So that's it for this strategy. And I've really used this strategy to, as I told you earlier, the one thing you need to understand with boom and crash, oh my God, it respects the support and resistance. It respects it. So any moment you know how to use support and resistance, you're good to go. Even the support and resistance of the Bollinger Band itself, it respects it so much. So if you know how to use a Bollinger Band, you know, that just will be an icing on the cake. Another thing you also need to put into consideration learning is learn a bit of price action. If you're good with price action, you will, in fact, boom and crash can be the easiest thing to trade if you have some basic knowledge on price action. So that's it. And thank you for all those who've joined our Telegram channel. I'm always key on sharing the knowledge that I have with you guys. I have so many premium indicators and I've kept on sharing in my platform. Please join us. And for those who want to join also my personal coaching classes, it only goes for $100. Goes for $100, but there you will get solid food. I have spike detectors that I have not unleashed. Sweet ones I've not unleashed. So you will get access to my primary spike detectors, 3 of them, and then 3 more strategies for boom and crash. That is my personal arsenal weapons, you know. So 3 basic strategies for boom and crash alone, 3 spike detectors, and then you will be part of a premium chat group, both for signals and for chatting with your group members, because we have a very large family where we put our signals in a chat setup so that people are able to scrutinize it, and you know, we post our results and feedback about the platform. But again, we'll get one-on-one time with me, and with that, I assure you, I don't have a problem with, you know, every trade that I catch. And when I get a really valid signal, I triple my account every day. It's only that I don't want to brag about my trading journey, but I triple my account every day. And please take advantage of these platforms, because you will never find any other platform with boom and crash kind of setup. Why? Boom and crash is one let me call it a currency pair that if you master it, oh my God, you will bank millions into your account. And all we are here is to change our financial status, okay? So take advantage, because I know these currency pairs will never be there like forever. We don't know what is happening with this COVID thing. There's a lot of financial resetting in place. We don't know the changes that binary will be bringing our way. So take advantage when we still have this opportunity. Like for me, I've given myself time to be in the market until February of next year. I know by then a lot of things will have changed. So I want to play around with this window of 4 months to really make as much cash as I can and be out of the market. So that by all this time the resetting is happening and everything, I will have retired, and I will have comfortably said I was online, I did make money, and I will now invest in offline investments like real estate and whatever. Okay, because let me tell you the truth, whatever is happening now with this COVID thing, it is a financial resetting. If you've watched, I'm a very deep researcher. If you've really keenly watched what is happening, it has nothing to do with virus. It is a financial resetting. So the ground is going to be tougher. If you get a way of earning a few coins online, take advantage of now. Things are about to get out of our control. So God bless you. I'm not scaring you, but it's the reality. God bless you and happy trading. Please join our channel and see you there. Bye. Happy trading.